Good afternoon, students. Today we are continuing the chapter number 5, that is ratio analysis, in which we will learn that what is profitability ratio, how it is to be calculated, and what are the various types of profitability. Before learning the types of profitability ratio, the meaning of profitability ratio should be clear to you. As you know very well that every business organization has its main objective of earning profit. Profit is an index which shows the growth and success of every business. So a business must be able to earn the adequate profit in relation to the capital invested in it. The efficiency and the success of business can be measured only with the help of profitability ratio. So following are the profitability ratio, which are gross profit ratio, operating ratio, operating profit ratio, net profit ratio, return on investment. Let's see how the gross profit ratio is to be calculated. Gross profit ratio. When you learn the name, the formula will be learned itself. We are calculating gross profit ratio, and profit is always correlated with net sales. So gross profit ratio is equal to gross profit divided by revenue from operation, that is net sales multiplied by 100. What is it? Gross profit divided by revenue from operation, that is net sales multiplied by 100. Now the question arises how the gross profit is to be calculated. Can be calculated by using the formula, that is revenue from operation minus cost of revenue from operation. If we deduct the cost out of the total sales, means the cost of revenue from operation is to be deducted out of the revenue from operation, we will get our GP, that is our gross profit. I hope the formula is clear to everybody. Let me highlight the formula, what to do. The gross profit ratio is to be calculated over here. How it is to be calculated? Gross profit ratio we have to calculate, and what is the formula? See, the formula is it is revenue from operations the formula will be of calculating gross profit ratio is, that is revenue from operations, that is net sales gross profit upon revenue from operations multiplied by 100. Please highlight this formula in your books as well. Now the question arises how the gross profit is calculated. How the gross profit is to be calculated. Gross profit is to be calculated with the help of revenue from operations, that is net sales, minus cost of revenue from operation. Please mind it is the cost of revenue from operation. So cost of revenue from operation is to be calculated by adding opening inventory plus net purchases. Please mind it, these are net purchases. If any returns are there, it is to be deducted. Direct expenses, included carriage and wages, minus closing inventory. Please understand, please learn, the closing inventory will be deducted. Rest all the items will be added, that is your opening inventory plus net purchases, direct expenses minus closing inventory. This way you can calculate the cost of revenue from operation. GP you can calculate now. Cost of revenue from operation you can calculate now. Then how to do? What to do? Put both of the things all together proportionately, and then you can calculate the gross profit ratio. There is one another formula of calculation of cost of revenue from operation, that is revenue from operation minus gross profit. If in the question gross profit is given to you instead of the basic information related to cost of goods sold, in that case, you have to apply the formula related to GP, revenue from operation minus GP. And in case of loss, it will be revenue from operation plus gross loss. Now, what is the objective or the significance of calculating this ratio? This ratio measures the margin of the profit available on the revenue from operations. So, let's see the practical part, then it will be clear to us that how the gross profit ratio is to be calculated in this question. Simply the sales, that is revenue from operation, and GP is given to you straightforward. You have to calculate the GP ratio both of the year, that is 2016 as well as 2017. And the formula is to be applicable GP upon net sale divided multiplied by 100. Now we have to compare, so we can make the comparison that in 2016 the GP ratio is more than the 2017. This is due to the reason that the price of the material purchase have gone up, or the wages or the direct charges, means cost of goods sold has been increased. Just because of that, the sale prices may not have increased in the same proportion, and GP ratio may be the less. In the next question 3, illustration number 90. Calculate the gross profit ratio. What is to be calculated? We have to calculate the gross profit ratio. How it is to be calculated? Here in the question, the credit revenue from operation is given to us, that is 3 lakh. Cash revenue from operation is also given to us. Now see what to do. Cash revenue from operation is to be calculated, given. The clue is given over here that it is being 25% of total revenue from operation. What to do in this case? Please mind it very carefully. How the calculation is to be made, you can do it in your book as well. See here, the cost of revenue from operation is to be calculated while in this question it is credit revenue from operation is given to us and cash revenue from operation. But what we require the total revenue from operation. How it is to be calculated? See, credit revenue from operation in the actual figures is given to us, but the cash revenue from operation is given with a clue that is it is of 25% of total revenue. For this purpose, we require the total revenue, but we don't have the total revenue. So what we can do? We can let total revenue from operation that is equal to 100. On the other hand, if I say next, the cash revenue from operation is 25%. Cash revenue from operation is cash revenue from operation. That is equal to 25 as it is given in the statement. You can see in the statement, it is cash revenue from operation is 25% of total. Let the total is 100, then the cash revenue from operation is 25. Now what to do? Now we can say the credit revenue from operation will be 100 minus 25, that will be 75. Is it do so? Now we can put the statement it is given over here. Hence, if the credit revenue from operation is 75, then total revenue from operation is 100. If credit revenue from operation is 1, if credit revenue from operation is 3 lakh, in that case, the total revenue from operation will be 100 upon 75 into 3 lakh, and it will be lakh. How much it will be? By having the calculation, we can see it will be. In this way, we can calculate the total revenue from operation. Let me clear the drawings, then I'll move ahead. See, now, cost of revenue from operation we required in this question. What we required? Revenue from operation and GP. And GP is not given exactly over here. What we can do? We can calculate the GP with the help of what is the formula is to be used here, that the GP is to be calculated with the help of formula the total revenue from operations that we have calculated earlier minus cost of revenue from operation. Now the question arises how the cost is to be calculated. How the cost is to be calculated. How it is to be calculated? It is calculated by using the formula that purchases minus excess of closing inventory over opening inventory. That is absolutely given in the. With the help of this, you can calculate here cost of revenue from operation. That is here 2 lakh. 2,80,000 rupees will be our cost of revenue from operation. Total revenue from operation, that is our 4 lakh. If we subtract both of these items, we will get our. Now, gross profit ratio is equal to gross profit that we have calculated 1,20,000. Revenue from operation, that is 4 lakh, multiplied by 100, 30% will be our gross profit. See, in the next question, it is given over here that the cash revenue from operation is 1/3. Another clue is given to us. With the help of this clue, you have to find out all the information that is required in the question, and then you can calculate your GP ratio. Let's move ahead. You have to do your questions related to GP ratio yourself, and if you find any difficulty, any confusion is there, feel free to take your queries anytime. I'm just moving ahead with the operating ratio. Now, question arises, what is operating? This ratio measures the proportion of an enterprise's cost of revenue from operating surplus expenses in comparison to its revenue from operation. So operating ratio is equal to, it is not operating profit ratio, please mind it. It is operating ratio. Cost of revenue from operation plus operating expense minus operating income upon revenue from operations into 100. Please mind the formula, learn it very carefully. By learning the formula, you will be able to find out that what are the items required by you. So what you required first of all, that is your cost of revenue from operation, opening inventory plus net purchases plus direct expense, that is your carriage and wages minus closing inventory. We did it in the previous question set. Another formula of calculating of cost of revenue from operation is revenue from operations minus G. If I talk about the operating expense, how it is to be calculated, all the expenses related to the business operational activity. Those are maybe the employee benefit expense, depreciation and amortization of expense, other expense like office and administration expense, selling and distribution expense, discount, bad debts, interest on short-term loans. By adding all these expenses, we can calculate the value of the operating expense. Now, operating income. The trading commission received and cash discount received will be considered as the operating income. Have an attention to the important points that are depreciation and amortization expenses are included in operating expense. Spare parts and loose tools are excluded from the inventory, but in inventory, loose tools and spare parts are not to be. Non-operating expense should be noted down. It is highlighted here, such as loss on fixed assets, loss from fire, income tax, charities and donation, financial charges relating to interest on long-term debt, interest on debentures, etc. So these things are to be ignored while calculating this ratio because these are your non-operating incomes. And non-operating incomes are sale, profit on sale of fixed assets, interest and dividend received on. It is also to be. Now, why operating ratio is to be measured? It is measured of the measurement of the efficiency and profitability of the business enterprises. The ratio indicates the extent of revenue from operation that is absorbed by cost of revenue from operation and operating expense. Lower the operating ratio, the better it is because it leaves the higher margin of profit on revenue from operation. In this way, we can calculate it. Let's do illustration number 96, then it will be more. Have a look. I'm giving you 1 minute. If you find any query, please raise your hand. Clear to everybody? Okay, I'm just revising it myself once. Revenue from operation sales are given to us. Revenue from operations return is also given to us, that is our sales return. Cost of revenue from operation, that is 1,50,000, and selling expense are also given to us, that is 40,000. Administrative expense are 20,000 given over here. What to do? Operating expense, we know very well. All the selling and administration expense out of these are known as the operating expense. Cost of revenue from operation, if it is given directly in the question by adding both and divided it by the net revenue from operation, that is to be calculated sales minus sales return, multiplied by 100, and finally you will get your operating ratio, that is 84. In this way, you have to calculate the operating profit ratio. Let's go ahead. You have to do the question related to operating ratios, and if you have any query, please feel free to ask anytime. Our next ratio is return on investment ratio. This return on investment ratio is also known as return on capital employed, rate of return, yield on capital. Yield means income. The term investment here refers to the long-term funds deployed in the enterprises, and as defined earlier, long-term funds are also known as capital employed, which means the total shareholder fund and long-term. The ratio is computed as under: return on investment is equal to ROI is equal to net profit before interest and tax and dividend. How it is to be calculated, how the return on investment is to be calculated. Please mind it, you have to consider the profit before is the profit before interest and don't forget it is before interest, tax and dividend. These three items will be taken into consideration while doing it. What is it? Net profit before interest, tax and dividend divided by capital employed multiplied by 100. Now, how the net profit capital employed is to be calculated? Capital employed, if you calculate it from the liability side, right? The two methods you can calculate it. If you are calculating it from the liability side approach, the item shareholder funds, non-current liabilities that are long-term borrowing and long-term provision are to be added to find out the capital employed. But if you are applying the asset side approach, case of asset side approach, capital employed will be non-current assets plus working capital. And non-current assets are here all the tangible and intangible assets, non-current investments, long-term loans and advances. And working capital is here current assets minus current liability. In this way, we can calculate our capital employed. How the net profit before interest and tax and dividend is to be calculated, let's do in the numeric, then it will be clear to us. Let's do illustration number 108 and then it will be clear how the calculation is to be done. Here the equity and liabilities are given over here in which shareholders fund, non-current liabilities, current liabilities, asset side, non-current assets and current assets are given to us. Here the notes to account are also given. Reserve profit for the year, long-term borrowings, 15% debenture. We have to calculate the return on investment. So we have to calculate the net profit before interest, tax and dividend first. So what to do in that case? Whatever the profit, because first of all the interest is to be deducted, then tax is to be deducted, then any other, then we get the profit before dividend, and then the dividend is to be provided. So what to do in this case? The formula you have to write. Again, I am telling you net profit before interest and tax upon capital employed multiplied by 100. Now, the net profit before tax, how it is to be calculated? It is to be calculated by using the formula. We have the profit as per the balance sheet. Out of that, we have given the interest only. So, interest on debenture will be 15% of the face value of debenture, that is 15,000, and total 80,000 will be our net profit before interest and tax. But it will be net profit before interest and tax. And capital employed, if it is calculated from the equity and liability side, share capital, reserve, profit for the year, 15% debenture, long-term provisions and capital employed. By adding all these, rupees 4 lakh will be considered as the capital employed. We can calculate the capital employed by the another method of the asset side, that is non-current asset, add a working capital. And working capital is to be calculated by current assets minus current liabilities. And you can calculate the same way your capital employed, it will be as same as you calculated by the first method, that is 4 lakh rupees. Now the return on investment can be calculated by putting the value in the formula, and the formula is net profit before interest and tax divided by capital employed multiplied by 100, and it is 20%. Please mind it, all the profitability ratios to be given answer in percentage only, not in times. Profitability ratio in percentage. It is all about for the day that we have done. Let's recall what we did today. We started with the profitability ratio, as profit is an important element of every business. Every business concern must earn adequate profit in relation to the capital invested, because the profit is an index of the efficiency as well as success of every business. While having the profitability ratio, we have to learn how the gross profit ratio, operating ratio, net profit ratio, return on investments are to be calculated. In gross profit ratio, I make you learn operating ratio. I also make you learn the operating profit ratio and net profit ratio, in which the formula is little change. That will be your operating profit upon net sale. In fourth case, net profit ratio, the formula will be net profit upon net sale. You have to do these questions and apply these formulas. I have discussed gross profit ratio, operating profit ratio. The third one and fourth one is absolutely similar to that. You have to work and send your queries, and I'll explain the queries in the next lecture. Operating ratio is quite different that I have discussed, and return on investment is also different, and items are to be calculated thoroughly. We have discussed during the whole lecture that how it is to be calculated about all these formulas. Now do the practice and solve each and every example as well as practical, and then send your query and I'll explain your queries and satisfy you next lecture. Nice for the day. Now I request Akhtar to allow the to discuss their queries. I want to have the feedback. Now, students, you are requested give your queries if you have any till the topic. Today we will finish by the chapter question of every type of ratio, because after this all the questions of the ratio analysis are the consolidated question, in which you find the question ratios, whether one of the ratio is to be calculated related to liquidity ratio, another ratio is to be calculated from the profitability, and you find that a consolidated question in your paper carry 4 mark. So complete your chapter. I have finished by the chapter. If you have any query, utilize these 3 days so well. Complete your chapter. Practice each and every example. Practice each and every question additional as well. Because practice makes a man perfect always. Now please raise your hand if in the chapter if you have any query, any doubt, feel free to ask.